such a great pleasure that I can introduce you to our first panel. We thought we'd kickstart this day with some inconvenient questions. So when it comes to developing a crypto thesis, how do you even begin figuring out what is noise and what is signal? How do you find the great projects? So these two speakers, Etienne and John, have the experience, the know-how, albeit from different angles. They both have fascinating backgrounds and relatively similar crypto origin stories. So first up, I want to introduce you to Etienne. Etienne heads up digital asset fund TRGC. He is at the start of every crypto deal. He's one of the most active investors in the space and incredibly skilled when it comes to elevating up and coming projects to the world stage. In another life, he was a basketball coach and a biotech trader. So next up is John. Where to begin? John was at Netscape early doors. He then started and sold an e-commerce business in Chicago. He went into the telco business afterwards at Sprint, where he ran a $5 billion P&L. He then moved into the pro sports space, where he built tech and media companies. And now he's chief strategy and blockchain officer at a social metaverse company. So apologies for both of them, because that was an incredibly brief summary, but I don't want to take too much time away from the panel. So Karim, over to you, and enjoy.
Thank you, Irini. So John and Etienne, we've had some conversations already, and I'm feeling like I've had such a great opportunity to learn from both of you and got to know you a little bit more. So I'm just going to step in here a little bit to help our audience learn from you a lot more today. If you'd start, I know this is it's a huge topic that we're talking about, and I'd like for you, Etienne, to start a little bit about who you are, what you've done, and why it is that you do what you do today. We'll go over to John, and if we do the same, and then before we get into answering the questions that we've posed today at this event, the reason we want to do this today is after having understood your backgrounds a little bit, I think it's an important precursor for that understanding, to understand the perspectives that you have on your particular topic. Thank you. Well, I'll let you go, Etienne. I'm going to put myself on a stop video. We'll keep on this going. When you see my head pop up, it'll be because I have a question to ask.
Okay, awesome. Thank you so much, Karim, Bill, Irene, John. Nice seeing you again. Hi, community. Honored to be here. So I'm Etienne, based in Amsterdam. Been full-time in investing into the digital asset, if you will, crypto space since early 16. Right before the DAO hack happened, and eventually Ethereum had to fork later that year. On background, I was born in Suriname, it's a small country in the north of South America. Spent some time on the streets, homeless. That's kind of like first anchor in who I am as a person, right? Really a survivalist, resilience are big anchors to me. But I was curious, trying to figure out like what is the probability of me being born in this country out here on the streets. So figuring out in who I am, where I am, is still a big part of me, that curious brain of trying to figure stuff out. After that, I got lost in basketball, elite sports performance, worked at several NBA training camps. So those two experiences really form who I am as a person. And right now, running a fund, TRGC, performance as in daily improvement. I try to bring the lessons I took from sports to investing. How do we improve as a fund? How do we get better? And how do we win? What is winning? What is winning from a fund and investing perspective? So the rules or the principles in elite sports performance is what drives me. And lastly, to add there, from an investment standpoint, to me, is the thrill, as Richard Feynman would call the famous physicist, is the thrill of discovery. Every time you talk to a founder and they show you what they're building, is that your eyes light up like, hey, whoa, what's this, right? And second to that, like how can we add value to this journey? as you're watching this little baby come to maturity in a few years. So that's what.
That's a great intro. Thanks, Etienne. I mean, just an awesome background, and having a chance to get to meet you. Super impressed by your background, and obviously super impressed by what you've been doing the last few years in the crypto space. So look forward to seeing you in person here in a few weeks. I'm John Burris. I'm the Chief Strategy Officer and Chief Blockchain Officer at Together Labs. And it was shared in a great way. It really is kind of a social metaverse platform, which we can maybe talk about here later. My origin story a little bit, since we went way back. I was born and raised in Iowa, kind of the farmland, if you will, of the United States. So grew up with kind of a hard work ethic. Was a big part of my life. And I normally don't share a little of the sports background, but athletics were a big part of my life. And I ran track and field all through college, was a Division I track and field All-American, ran in Europe for a while. So it's interesting, and I haven't shared that yet as much, just the sports background. From a professional perspective, though, whether it's always healthy, I'm always attracted to these new, I'll call them, dynamic, and in some cases, world-changing spaces, right? I would say out of college as an engineer, it was probably a little bit of fortunate luck that I was at Netscape pre-IPO. This is, in 1996, to date myself a bit. This was when the first internet browsers were going out to consumers, to the general public. And I would say in a lot of ways, the internet was just starting to take off. Right? Billion-dollar early valuations of IPOs was just a new thing. Fast forward a few years, it was shared. I started an e-commerce company in Chicago with some guys. We sold that 3 years later. That was part of that hot new space of e-commerce. You can imagine at the time, 87% of the e-commerce sites didn't even take credit card transactions, right? This is early internet. Then I was attracted to the new mobile space. This was when I was at Sprint, and the first color phones were coming to the US, the first phones that had cameras, the first phones that could play any inkling of music. And that's where the team that I had around me was awesome. And we grew this massive kind of P&L as everybody started to engage with mobile devices and content through those. I'll fast forward a little bit here. Then to that point was early on in the video streaming, sports media, technology space, and did a lot of cool things. This was when the first iPads were coming out. People were really starting to stream. Netflix was just moving from sending CDs to your house or DVDs, right? And now, of course, as was shared, and I think the purpose of this discussion, have been in the crypto space for 4 or 5 years. And again, just like all those spaces, a very dynamic, a very, I think, global changing space, and something that definitely keeps me excited, interested, and working my tail off. So that's kind of my longer story.
Etienne and John, thank you for that background. And the reason why we wanted to put that into perspective, as we look around us, some folks will say, you guys are a little bit older, don't know what's happening, and we should be paying attention to the young folks who understand the crypto, gaming, digital assets, building wonderful new companies. But I think what people forget is actually the perspective and wisdom of experience and age. There is no way that you can understand what's happening now without looking a little bit into the past to figure out what might happen in the future, and taking your experiences that you've had in the past, growing up with the internet, growing up with dial-up, growing up with the smartphone, and actually now playing in this very, very new and vibrant economy of new digital assets that you both are playing in. The question I pose for you is this, and I'm going to start with Etienne because this is what he. Tell me, are we in a bubble? What is this indication? What does this indicate to you in this digital asset space, however you want to define it?
I know this question was going to come up, so quite luckily, I had ordered a book on the internet and it came in today. So here goes. Can you read it?
Yes.
Right? The history of financial speculation. I guess to answer your question straightforward, yes, we're in a bubble, but I love bubbles, right? Bubbles are, they're intriguing and I love them because bubbles are inherently what drives what we know as capitalism, right? There's a new industry, a new paradigm, being formed, and that is definitely going to attract all kinds of risk capital, right? People are going to flock to that, sheep as herds. The herds are going to rush in because we know get in early and watch it grow and reap profits. So yes, definitely we're in a bubble, but the funny part about bubbles is that it has this negative connotation in society, right? People slap it around to disregard a particular industry as in, oh, it's a bubble, right? So pay no mind, it's going to crash and everybody's going to be left crying and reaping their losses, right? But if you go back in history, for instance, I'm in the Netherlands and we're famous in history for the tulip mania. But the tulip mania made the Netherlands, if you look at it, it's $1 billion annual flower business, tulips being exported to all parts of the world. So did it go to zero after the bubble burst? No. It found its footing, found its fundamentals, and it kickstarted a new industry, right? So short answer, yes, we're in a bubble. Is that a bad thing? No. I guess when bubbles collapse, I immediately kick into second gear. Okay, buy up the remains, right? Because the remainder is going to show its value. We saw the .com boom. We got the Amazons, the Googles, the Apples, and everything afterwards, right? So the bubbles are actually, I think we should change the narrative in how we look at them, redefine that term in how we approach it.
John, what does this bubble signal to you?
I think Etienne,
if you believe we're in a bubble, I mean, you may not.
Yeah, no. I think Etienne lays a good foundation for how to think about the market, being, in a macro sense, in a bubble. And I would posit, and I think he shares the same opinion, that these spaces that are growing this fast, the early internet as well, and all the companies that were IPOing and value being created, that was seen as a bubble, right? The way I think a little about it is, at any given point, are there bubbles inside this macro crypto market or this new digital asset space? For sure. There probably always will be, right? Just like there probably are on the public side of more traditional markets. So are there bubbles in here? For sure. And then I would say, is this market more volatile than traditional markets? For sure, right? So I think a lot of us would feel like a 10% swing in an asset. That's hardly a bubble. That's kind of how the space rolls, depending on the asset type, right? In fact, that might be a soft day, right? So are there bubbles? I would say yes, that's the way I think about it. But are there long-term plays? And is real value being created? And I think it actually isn't that hard. It's not like 1 in 100. It isn't, if you look at some of the top assets in this spaces, I think, to find real plays, I don't even want to say companies necessarily, but real companies, plays, projects that are really building value or doing something special, no question. So there is an opportunity to really find value in this space. And because it's part of a really exciting, at some level, even hyped up space, there's a real opportunity to build value or build wealth, just to put it in those terms, right? So I think that's what makes it exciting. I think it's interesting too, seeing the poll results come in here a little bit, not to jump in front of those. I don't know if that was my role, but a great audience here listening this morning, who I think gets this space and is leaning into it, right? We get that there's a lot of potential overvalued assets, but that does create a lot of opportunity.
How then, yes, okay, there may be a bubble. Some of us may think so. How do you separate then the noise and the signal? How do we sift through value versus herd mentality? John, that's for you.
Yeah, no, I think it's a great question. And I'll pause just for, it's just a pause, just kind of unpack it just for a moment.
Yeah.
I think this space is interesting. And this digital crypto asset space has got a lot of different categories to it, if you will. So just to toss this out, I think the way you'll look for real value, and I don't mean like, undervalued opportunities, I mean like real value that can grow. I think it's different if you're looking at stores of value like Bitcoin and some of its peers versus, and I'll just be dramatic here, like NFTs, right? That space is a whole different kind of set of criteria for how one might evaluate, does this NFT or this space or this category have long-term value? So one thing I would say is that, in my opinion, there's not a single blueprint for finding those opportunities in any of these categories in the crypto space. But that said, one key indicator, and I may have shared this earlier, is how much I'll say it this way, kind of real usage, real value, or how much of the real value proposition around an asset or a company or a crypto project is happening. How many engineers are behind it? How many real users are behind it? If it's a metaverse, how many metaverse users are there? How many digital assets are being bought and traded by folks that are actually playing in that metaverse? Versus, which is awesome, but versus just lots of trading activity, right, of those assets in the market. Nothing against that. That can still create a lot of value from a returns perspective. But one thing that I personally look for in my approach, and as I think we think about viable projects, is how much real usage, right, of that project based on what it's trying to actually do in the space is happening. I think is a real good leading indicator.
Thank you, John. So Etienne, given your background, and you've been investing for, I don't know, 2 decades now, and started off with some really interesting ways to understand and separate noise and signal, really interested in some of the changes of investment strategies that you've been going through, from SaaS companies to coin companies to digital assets, and now looking forward to the health space as well. Can you walk us through how to separate what you look for and how to separate the noise from signals?
I think John already alluded to that. Definitely put it beautifully. I think, for instance, it's a phenomenon in crypto. It's what we call CT, crypto Twitter, right? You go on there, ask a question, and you get responses, right? It's kind of like this knowledge of the crowd, gathering of information. The first thing I mute is price talk, right? First thing, I mute it. And to what John is saying, you go back to actual guys that are building, because they have a keen eye in what's actual value being created, what friction points in blockchain technology is being solved, front-facing user onboarding, user experience. People that are on the ground in the mud, as I call it, are actually adding value and expanding the capabilities of this tech, right? I want to talk to those guys. You would see a lot of guys on the internet, and it's marketing is what we call the shilling. It's a lot of price talk. I predict Bitcoin is going to be at $1 million by the end of the year. I'm like, guys, come on. It is not really an investment thesis, isn't it? Right? So you go back and let us have a conversation with the actual Bitcoin builders. Who are the guys that are actually building on this core tech? For Ethereum, for instance, find the guys that are in the Ethereum R&D team, right? Those guys could actually show you like, okay, we're at this stage. My personal belief is I don't think we're there yet to onboard 7 billion people on one blockchain. I think there's going to be several ecosystems for several maybe business sectors, maybe gaming, supply chain, social media. I think if you start dissecting in such a way, you would find indeed great value out there for us as investors. So through the years, even after .com boom, there's a lot of similarities there where if you look at the famous pets.com, or I saw this YouTube speech one time from this guy. They had built YouTube 5 years before YouTube came out. And what they realized, they had everything in place, but they failed to realize that no one had broadband, high-speed internet at home, right? You miss this tiny little feature, right? So through the years, I've tried to stay as close as possible to the ground, as I call it, ground floor, and everything above. I get very like, hey, am I being sold here by a great marketing narrative? I always want to ask myself that question. How much of the value that I'm buying here is marketing? What percentage, right? I don't mind a bit of marketing, but if, like John said, the amount of people building on a chain, use value, what's going to drive the value of the token, et cetera, what type of large deals are they closing? If that's not there and it's comparative to other chains and it's market capitalization, you could throw in so many variables to be like, okay, what is a great pickup for us as an investor? That's what I look for. And I've done it in biotech, I've done it in a medtech, and since I've been in crypto for 5 years, try to stay as disciplined to that as possible. And that kept me away from the more marketing heavy place, I would say.
So this is an interesting point. How do you keep that discipline? How do you stop yourself being swept away by marketing and everyone else's decision to do something? I mean, it's just you, and you've got 10 people around you saying, Etienne, John, this is the next great thing. How do you stop yourself?
Well, actually, in my years in investing in stock markets and traditional, I would say, public markets, you would read up, actually, you start learning different philosophies, right? Like styles. Even if you would invest in a hype cycle, right, in a hyped up market, you're like, okay, this is my entry, this is my exit, I stick to that. And suddenly I had found this thesis of contrarian investing. And so to your point, if 100 people, and out of 100 people, 99 is going to tell me like, hey, this thing is going to go up, my brain goes, why? I'm going to be the last skeptic in the room, right? And sometimes, to be fair, the skeptic is going to miss a few plays, right? That where your surroundings is going to say, hey, this thing is going to go 100x or whatever x. And I'd be like, nah, I'll stay on the sidelines. And you see them party a week later or a year later, and you're like, oh my goodness. So you stick to that, right? So contrarian investing, if everyone is going left, I'm usually the one going right, because I want to look for opportunity where the herd is not invested yet. That's my key. That's a key principle. You want to find that before the masses, and stick to that. Be disciplined. If I'm early and it's good value, it's going to be a great pickup.
Thank you, John. If we look at what you do at Together Labs, you deal with a massive number of people globally. What do you think about Etienne's thesis of straying from the herd? Because gaming means you're going with the herd.
Yeah. You know, it's interesting, and there's some things in these in the market, and I'll kind of shift the market a touch here, since the question kind of ties back to the metaverse and avatars and people spending time in virtual spaces. One thing that's happening in that space, that a wave that we'll take advantage of, that we're definitely a part of, is the growth of that usage. So we're not running away from folks engaging more and more, you know, in these virtual spaces. That's what our business and our platform's all about. People spending time in social platforms. And to Karim's point, we've got over 1 million daily active users on our platform, half of them outside of the US, so a very global experience. What's a little bit contrarian, though, as we look around our peers, other large companies, some that are public, some that are very large and private, is that a lot of them have been shy on the crypto space. I think just now they've started, you know, internal projects around NFTs, because it looks like a very kind of straight line to create some value for themselves and hopefully their users. For us, though, and I'll say this a little contrary, we jumped in earlier, right? We started to work through this space several years ago, you know, just about 4 years ago. We knew there was an opportunity here, and we firmly believe that the future virtual economy will be built on the blockchain. So it's definitely contrarian in the space, the way we've approached it, and kind of jumped in, even though others were scared and didn't think, you know, weren't sure what was happening. And I think it also took a little bit contrarian mindset to potentially risk parts of your business model that are already working nicely, right? We've had nice business growth, but to introduce a new crypto asset, a new digital currency, Vcoin, that we did earlier this year, or to introduce NFTs into our platform, where we sell about $10 million of virtual goods a month, those could all be NFTs. It takes a little bit of a, I'll say, contrarian mindset too, to potentially risk parts of your business model to get into this space. But if you've got, you know, if you're right on the vision, or you see the space evolving in a direction, and we believe we do, we think others are starting to follow, you know, you can create a lot of value. I'll keep using that word generally, right? In the space.
So thank you. That was a great answer. So I'm going to, there's been a couple of Q&As from the audience, and I'm going to consolidate a couple of questions into the following question. And perhaps, John, you can start with your response.
Okay.
Looking at the way you run your company, it's obviously you're touching various parts of the globe all over. Do you find that there is regions or regions globally that are skeptical about digital assets, coins, NFTs? Is it a regional thing, a governmental thing, or a cultural thing?
I would say it's probably all three of those, and maybe even, and I know you brought this up, you brought up age earlier. It's probably a little bit, if I stir up the pot, right, a little bit of an age thing. It's a little bit of a mindset thing. There's no question, and we see this reflected already in our business in this 3D avatar space, where we have certain kinds of users. If we're to generalize, right, regionally, right, so we have got users in Brazil and parts of South America that really love the fashion aspects and the social aspects of our platform and engage from that angle. We've got, and even the way they think about the economy in our world will come from that angle, selling virtual goods and clothes. We've got other users, if I was to generalize a little bit, in Asia that sometimes that are focused more on earning on our platform than they are necessarily being social on the platform. Even though that happens, just a little different mindset and approach. Our European users, in a lot of cases, often look like, at least Western European users look a lot like US users, at least just from a users and usage perspective. And I don't doubt, I've got a feeling that that's probably quite similar to somehow in the ways that they might approach the crypto market, right? And not to get too sidetracked, but because we could talk about business plays in the crypto space that we see them really blow up in a positive way in Southeast Asia and then find their way to the rest of the world, or something gets hot in the US and works its way across the space. It is interesting. So there is a difference in that. It's an unbelievably global space. I've never seen an industry go global this fast. But that said, there are nuances, and some of them are pretty big nuances to cultural and usage and age, I think, in this space.
Etienne, what's your response to this? And let's pay particular attention to, the words come across of a fashionable investment, whether it's virtual, right? So is this sustainable? Because if you look at, if you take the demographics of age, enthusiasm, and wealth, that's a small market space compared to global population. So how would you think globally this will be able to sustain itself given those parameters we just talked about?
I think John made an interesting point there, where I've traveled to more than 26 countries in my years doing this, and going to conferences, try to build a network, meet people, talk to developers, go to hackathons. And you indeed pick up subtle cultural like nuances. You're talking to Asian investors, partners, teams, Europeans, or Northern America, Latin, and whatnot. Definitely age. My father-in-law, for instance, would ask me like, what are the balance sheets of these companies? Like, what is the balance sheet of Ethereum, of a protocol, right? So that tells you one thing. Our models that we know previously, right? His generation about how do we value a company? How do we value what is value even? It's being disrupted already, right? That's one, right? How do we value global protocol and usage? Second, something I've noticed also in traveling, you start thinking less in countries. Because in a sense, the internet made us like world citizens. And you start thinking less in countries. It's only when your local government, say China's response to how they would ban certain internet apps, or they would ban Google, unban it and whatnot. That's the only way you're like, oh, wait a minute, I'm in China now, right? Or so it's that local government. So the internet, going back in historical context, the internet already was that first major pose, that first headache for a government, right? A group of people, often democratically elected, they govern a piece of land with all its inhabitants, right? So then the internet came, it's connected computers, and we can communicate across the globe, right? And what John was saying, this thing going almost viral globally in what, less than 10 years. What's the next bubble going to be like, right? Viral in 6 months, right? So it's definitely your local government or US government China, Europe, cultural, age, it all plays into that in their approach to that. In China, for instance, I pick it as, because I've seen the Indian government do similar things, is strong control. The US kind of like, hey, we want to foster and engage and encourage open entrepreneurship. And in Europe, they're like, hey, we want to have a bit of both, just follow the rules, right? Let's have more meetings and after more meetings and then after more meetings, right? It's meetings after meetings before they come to a decision. So definitely on that macro level, you'll see different flavors in their approach to new technology. Last thing I could add to that, I was in Hong Kong, late 16, having a beer with a group of friends. And when it was time to pay, we could already choose different options, right? It was WeChat Pay, Samsung Pay, and one of the terminals was Bitcoin, 16, right? And I'm like, hey, I haven't seen this in Europe yet. It was only one terminal, NFC, some payment rail. I was like, hey, wait a minute. And that is, and the guys were like, you haven't seen none of it. So we went to different bars just looking for payment systems, and certain bars would have 8. I was like, holy there, right? So there was always this disruption happening where in Asia they would play and disrupt technology and offer options. Some of them would come fast, disappear. And then WeChat was like, okay, we're going to dominate. I'm going to slap a lot of money on it and dominate. So it's definitely different regional flavors you would see. And now you're seeing by the likes of YouTube, because we copy behavior, right? We watch YouTube and we copy behavior, and we also copy technology. And that is why you're seeing stuff moving across the globe that fast. So definitely, I would agree with that point.
So the other question here would be,
like, we have our central place, but that in every space that you go to, there is this Black metaverse that you can visit and be a part of.
How did we get, so the other question is the utility and asset, right? You've got tokens, you've got currencies. Take an example, Bitcoin, XRP, Solana, all these other things that exist. And this reflects a question that we have from the audience, which is, which ones would you use as an investment vehicle? Which one would you use as a utility, or are there differences? And then let's talk about some of the rails that perhaps are being developed because of these assets. Of course, you know, Linqto is bullish on, I don't know if I can use the term bullish. By the way, if I say anything that's financial advice, ignore it, because that's not what I'm doing.
Me either.
Okay. So, when we look at picks and shovels and the gold mine, you look at XRP, and then you look at Ripple, and we says, hey, we think Ripple's an infrastructure play, a technology play that is supporting XRP, and therefore we invested heavily into Ripple, and Bill and the team has graciously provided a haircut on the current investment levels or cost of investments. So when we look at this question about opportunities in investments or infrastructure, tell me a little bit about how you think about that, and how do you actually separate the two, because there is confusion.
I guess the question that comes up a lot is what's going to capture the value, right? It's going to be equity, going to be tokens. That's the first question we need to answer right off the bat, right? We prefer token if there is, if the equity in a sense doesn't make sense, right? Because if you want to play global, equity means the business model, the business itself is jurisdiction derives from a nation's law, right? Like you're going to be a Delaware C Corp, means, I guess, SEC, US law. But if you want to play globally, how would that matter? How would that make a difference, right? So the token kind of like lives in the cloud, it's on a network, it's it kind of like it's a global stage, and doesn't answer to a nation state, if you will. So you quickly realize like the token is going to capture the value, right? But obviously there's a friction because governments are like, hey, we want a piece of this. What is the tax revenue here? And that's definitely a different conversation you're going to have. So in our opinion, oftentimes token is a better vehicle to capture value.
So before I go to John, if you are an attendee and would like to come on live, we're 10 minutes away from the end of this session. If you'd like to come onto this session and ask a question live, just raise your hand and we'll move you over as John answers the same question.
Yeah, no, I think it's a great question, right? And this crypto asset space, I'll just kind of pick on that. If you go to CoinMarketCap and look through them, you're going to see a mix. Again, this is not just like equity plays, or maybe it is, where behind these tokens and the value that we see, right, the market cap of these tokens or the daily or monthly movement of the value, behind those are different types of plays. There, and just Karim, as you outlined it, there's infrastructure plays, there's currencies that are I would call our straight currencies that are part of that space. There's more utility tokens, and I think those engaging, whether you're engaging to actually use them in the market, use them for intended use, or it's your investment hat that you're wearing when you purchase them or hold them. It's important to understand what the play is behind those, right? And I'm seeing one of the chat conversations. I think it can be confusing at times too. Just want to share this real quick because I do agree, not all these assets are digital currencies, but at times users can use them like currencies. And just one little quick fun point, Axie Infinity, if folks are aware of that phenomenon right now, people in the Philippines are starting to pay for cab rides with their Axie, with AXX, right? With the tokens they have. It's not really a currency, but people can start to use it that way, right? It's just, so I'm not saying it changes the intended use, but it can get confusing in this space as to what is really going on. And I would just toss out, I do agree with Etienne too. I think just given this space and the value, the liquidity, the opportunity to purchase, hold, and engage and use tokens is really a massive play. It's really a game changer, I think, in this broad financial business market. The equity play has always been around and still has a lot of use cases in this space, but the first place that I look, and I think that a lot of users look at this space, are the actual tokens themselves, right? What is the play behind this, the utility, and for some, what is the upside?
Thank you.
Is I think a place to focus.
Right. So before we have Rami ask his question live, I have one other question. We see now a couple of countries that are allowing perhaps Bitcoin as legal tender. I think there's 1 and 3 now maybe that have governments have said yes. What's your thought on this idea and where it's going?
Personally, I mean, I think in all kinds of movement, I'll call it forward for an asset like Bitcoin and other assets, as countries make it more clear what their regulatory rules are, or people start to adopt it in new ways, or as we see an asset show up at a traditional broker, and now more people can. All that movement forward, I think, is good for the space, right? It's a good movement for the space. That said, people, in my opinion, shouldn't get confused and think that that's the only indicator, or that true usage in the streets now in El Salvador should be the leading indicator whether Bitcoin has real efficacy in the market. Right, that to me is just ridiculous, right? And we know too that the actual use, even after regulations have changed, the real use in the streets or even in the virtual world will take time, right? It's going to be a flywheel as people start to understand how to use these new assets in their daily lives, whether it's converting their weekly salary into Bitcoin, or having their inheritance stored in Bitcoin, or trying to use it to buy a coffee, which probably wasn't its intended use. But anyway, I do think all these indicators are good and important. And again, Etienne and I have both been talking about real usage. That said, I don't think there's single indicators that should tell you, to me, it's crazy that an asset could lose or gain, 20% in value just based on one indicator like that.
Etienne, before you respond to that question, I'm going to change the parameters of for your answer. which token or infrastructure is a close competitor to Bitcoin in this same respect?
Ethereum, right? Actually, during the Ethereum ICO, their fundraise campaign, I had seen Vitalik speak and heard him speak, and I realized Bitcoin is kind of this static blockchain, and here is this new proposition of we could like onboard hordes and hordes of developers to come and build applications. That's when you realize, like, wait a minute, these guys are just going to tweak the internet, right? And that to me was like that light bulb moment to me. Okay, I'm going head first, all into this. Once you start realizing that, and it's the juggernaut that GitHub is, like the smartest kids on the planet are writing beautiful code, and they're creating applications. It's just mind-boggling to be in this, to be alive now and to witness this is just a front row seat at one of the craziest moments in history, where you could send $1 million indeed XRP, $1 million USD to your friend in Japan for a penny, and they would get it in less than a minute. What happens if we start sending contracts, NFTs, whatever? It's just mind-boggling, right? So many new business models coming up. So in a sense, it's definitely Ethereum. And after Ethereum, obviously people got that notion like, hey, wait a minute, the idea of a smart contract is such an amazing invention. So now you have the Solanas, the Cosmos, the Polkadots, all with their particular style of how they want to solve certain fundamental problems in how to get that going safely. It's just amazing. It's just amazing.
So we're not going with the herd, and we're not under marketing hype right now.
What do you mean? What do you mean in general? I think you're
XRP,
successful.
Ether.
No, because I think we're still early. I think if sometimes you talk to bankers and guys that trade on traditional markets, institutional traders, the volume they're seeing, crypto is, when I joined crypto, it's like 200 billion, 100 billion market cap, right? And certain banks would trade that in a day, right? And we're talking just one bank, so now you look at it, we're still early for the world's value to be put on a blockchain and that value being transacted every day. So I think we're still early. Definitely.
Thank you. Rami, your question, please. And then we'll hand it over to Irene to introduce the next panel. Yes, Rami. No, I think we lost him. Well, no, hold on 1 second. We'll give you 1 second. Rami, can you ask your question? Okay. Perhaps in chat later we'll answer that question. John, thank you so much. It's been wonderful to have you here. I'm sure there'll be other questions. I'm sure we'll find out that there's more interest in learning about this. Thank you so much. Etienne, it's been a pleasure to see you again. Thank you so much for being here today. Stay with us or come back.
Yeah, for sure.
Sounds great. Thanks, guys. Take care.
Thanks, guys. Take care.
Irene,
appreciate it.
Over to you. Thanks, guys.